Choosing the best StashAway risk level comes down to understanding how the platform allocates your money across global equities, bonds, commodities, and cash based on your tolerance for volatility. StashAway uses its economic regime-based allocation framework to rebalance your portfolio depending on market conditions, but the risk level you pick determines how aggressively or conservatively your money is positioned. Lower risk levels focus more on bonds and defensive assets. These portfolios move slower, experience smaller swings, and are designed for people who want stability over fast growth. They're suitable for short-term goals, emergency funds, or anyone uncomfortable with seeing their portfolio drop during market corrections. If you expect to withdraw your money within 3 years, a lower range is usually the safest direction. Mid-range risk levels offer a balanced exposure between stocks and bonds. These portfolios aim for steady long-term growth without extreme volatility. They fit medium-term goals like buying a car, paying for education, or building general long-term wealth while still sleeping well at night. They allow for growth, but the swings are moderate and manageable for most investors. Higher risk levels are heavily tilted towards global equities and growth assets. These portfolios deliver stronger long-term returns, but they also fluctuate sharply during market downturns. They're suitable for people with long investment horizons, strong tolerance for volatility, and the discipline to avoid emotional withdrawals when markets fall. If your goal is retirement decades from now, or if you want maximum growth potential and understand the ups and downs, higher risk levels are the most effective. The best StashAway risk level is the one you can stay committed to during both market highs and deep corrections. Pick the level that matches your time horizon, your comfort with volatility, and your ability to remain consistent regardless of short-term market movement.